Hey guys, this is a market update. We've probably got about 6 to 12 months left of this bull market, which is great news. So a long way to go and hopefully a lot of price appreciation left. But the money being made now isn't being made now, right? It was made 2 years ago, 18 months ago down here at the last bear market, buying at 16, 18K. People are up 400% on their money there. That's where the money was made, not now. As we go higher, risk goes up and potential returns go down. Now, this latter stage of the bull market, you tend to get people going out on the risk curve. And so that's all yet to come. But that actually signals the end of the bull market, right? So it's like two sides of one coin that you have to be careful of. Great returns, but also you have to worry about the next stage, right? So we'll go through that in this video because there's an insane change happening in the States right now, right? And so we need to talk about this because this is going to change world markets and it's going to I think create massive volatility in markets as well. So we have to be aware of it. If you do trade Bitcoin, check out Bybit. I trade on here up to $30,000 as a deposit bonus. I'll leave the link below in the description. The Trump admin is going to change the way that the US works. And there's obviously huge volatility around this because the market doesn't quite know how it's going to work out. And so I think this is both very bullish short term and creates even more issues for the fiat currency system later, which is why we have to be out of that system. So the US has an issue, right? The debt to GDP is too high. And we know that you can't cut the debt, you can't cut spending, you can't cut the debt. Because if you cut the debt and cut the spending, you're actually canceling money out of the system, which drags GDP lower. And if you drag GDP lower, then the debt to GDP isn't sorted out. Right, so it's this ratio. You can't cut spending, you can't cut debt because we're on a fiat currency system, a debt-based system where the demand for currency is rising. So you actually have this, if you look at every chart of money supply and debt worldwide, it's just up and to the right. Okay, you can't cancel that out because if you cancel all of that out, you reduce the price level, you reduce GDP, you make debt to GDP worse. So the only way out of this is to grow the GDP side of things. Now, there's two ways to do that. You can print money or you can incentivize free market economic activity. But the problem is that GDP is a fake metric. It doesn't actually measure wealth creation. It measures short-term economic activity and it can be gamed, right? The proof of this is during the pandemic, everyone got locked down and GDP went up because they printed money. The problem with printing money is we know that you can't create wealth through printing money. It creates massive problems and issues later on, which we're seeing right now come out because we've had 2 decades of it and there's issues now, right? So you can't just keep printing money. You have to incentivize the free market to come in. That's what the Trump admin is trying to do here. This will create a bull market and another bear market, right? What we're seeing is Doge trying to cut spending. Right? The problem with cutting spending, like I said, is that if you cut spending, then you are dragging GDP down and you're making the spending worse because the spending, the debt side is too high. It's 125% debt to GDP. So it's too high. If you cut spending, you drag the GDP down. Also, they're trying to cut, I think, 2 trillion of waste. Well, they're not cutting Social Security. They're not cutting Medicare. They're not cutting interest expense because you can't. And you're not cutting defense. So everything else is basically irrelevant anyway. So I don't know where they're going to get this 2 trillion from, but let's say they do it. They're going to cut spending, which cuts GDP, which doesn't sort out the debt to GDP ratio. And the treasury right here, this is interest expense. That's what they're trying to do now. By lowering interest rates, you're trying to cut the spending on the interest, but that creates inflation, which is pushing up asset prices as we speak. So we know that they're cutting interest rates because if you cut interest rates, you're trying to cut the amount of spending, but cutting interest rates then moves liquidity and speculation into the markets. That pushes assets up, which also creates inflation, which then they have to draw down later, which is another bear market. So these cycles like this, right? But the issue here longer term is the debt to GDP ratio and how you actually sort it out. The whole fiat currency system is built on sand and there's just no way out of it, right? Because we need to grow the GDP side. So that's great. We know that you can create GDP through printing money, but that creates awful outcomes that we're seeing. How else do you grow GDP? Incentivize the free market. So that's what the Trump admin is going to do, right? Cut government spending, cut the size of government, incentivize the free market. And so you're going to create GDP through incentivizing activity and incentivizing companies to come back into the States. That's great. And that will, over the short term, probably push GDP higher, which is great news. Unfortunately, longer down the line, the issue here is that the free market disinflates prices, right? All humans do is invent ways to get more out of less. Moore's law is a great example, right? Computing products just get better and better and better. and stay the same, around the same price or go slightly up. But the amount of growth you get in the quality is way higher than the price increase, right? And so you're disinflating prices by getting more out of less. That's what the free market does. What you're saying is when you're incentivizing this huge free market activity, down the line, you are creating price disinflation, which drags GDP, which makes the debt to GDP worse. So there's no way out, right? Because the fiat system is measuring this stuff, and the fiat system has to have inflation, but the free market is actually dragging it down. It's kind of ironic that doing the right thing is going to collapse the fiat system even faster. Once you realize that, the only thing to do is to get out of the fiat system, and so you have to be in assets, right? You have to be in assets like stocks, property, gold, Bitcoin. You can choose, right? I'm not saying Bitcoin is the be all and end all. I think it's the best trade, but there are others that can do this as well. I'll link Luke's post below because it's incredibly nuanced here, all this going on. So, if you have the US getting stronger, you have the fiscal situation sorting itself out, you probably get a demand for dollars, which means the dollar index goes up, which means there's more demand from foreigners to get dollars, and they end up selling their assets for those dollars to pay back their interest and their debt that they have, which is dollar denominated, which creates a kind of spiral downward in US markets as well. It's insane how this whole entire system, is essentially all leading to eventually the dollar having to debase itself through, the disinflation creating the need to spur inflation through money printing, or essentially yield curve control if everyone's selling their debt to try and pay back the interest because the price disinflation, which means the interest is getting worse. That gets worse in relation to the price level, so they need to sell their assets, and obviously that creates a big downward spiral in net tax receipts as well. So it's literally unsolvable. Right? Trying Doge before devaluing the US dollar or buying down US debt to GDP will drive up USD more. So what they're saying is all of this needs to happen, and you need to make the US dollar weak as well. But you can't make the US dollar weak versus other currencies. It's just not going to happen because those other currencies, they aren't having this economic activity come back on shore, right? So they're going to be weaker. Everyone wants the dollar because everyone's got debt in the dollar. You're talking about sovereigns and corporations here. So the dollar is going to get strong. That means you have to weaken the dollar against something else. And it's going to be gold, oil, or Bitcoin, or probably all three, right? It's really the only way. So this is an insane realization that there's just no way out here. And certainly as an individual investor, you just can't be in any fiat currency. It's just not going to work out well. And so there are assets we have to go into. I think Bitcoin's the best trade for that, but there are others if you want to get in those as well. Stocks, property valued in dollars, gold, but Bitcoin is obviously the kind of trade of our generation for this. The market clearly agrees at this point, right? BlackRock now came out this week saying you should have a 1% to 2% allocation. Yeah, it should be more than that, I think, anyway, right? But they have to say something. 1% to 2% is a big increase in the Bitcoin price right here. But it's not Bitcoin going up in price, right? Bitcoin is simply a neutral currency that can value everything around it. Bitcoin has no value. It has value within the context of everything else going on, which is all of these fiat currencies have to debase themselves against the measuring stick, which is Bitcoin. The only thing in the world that can't change is BTC, 21 million, that's it. So that is the measuring stick, and everything else is falling away against it. Dollars, other fiat currencies, or you can just buy the BTC and let the free market create abundance in goods and services. As they become more abundant, as other people put their energy into making things more abundant, you actually get wealthier because the amount of Bitcoin, the measuring stick, measures the abundance in those things and buys more of them. That's why people don't understand BTC, because they come to it from an investment perspective where they're looking at, income and revenue and price to earnings. None of that. This is the only hard measuring stick in the world that you can measure the abundance of the free market and measure all the nonsense happening in fiat currency. And it's just going through waves. These waves, these are not Bitcoin waves. These are fiat currency waves, because this is a dollar price that we're looking at. These are fiat currency waves. When you're looking about Bitcoin bull markets, what you're saying is, the fiat currency debasement cycle, the fiat currency bear market, how much debasement is going to happen over the next 12 months. That's what we're saying. We're not saying how much will Bitcoin go up. It can't go up. It's a measuring stick and it's fixed. How much will fiat currency and dollars debase themselves over the next 12 months? I think it's pretty likely they will. So we're in a bull market for Bitcoin. It's not a bull market for Bitcoin. It's a bear market for fiat currency. That's what's happening. You can see all of this here. This is a massive bull market. / bear market for fiat currency. They usually tend to carry on for a while. You can see the last one here, fear and greed index, right? It goes up and it kind of stays there for a while. We've hit it kind of once. Second time here, this could be it here where we go for the next 6-12 months or so, when you just actually stay up here as you get price discovery moving on. And that is the bear market for fiat currency. And at some point, things are going to happen. They'll have to draw it down again, which means maybe raising interest rates if too much inflation is created. Inflation in products and services, which is the debasement of currency. It's two sides of the same coin, but you can't be in the fiat. If you do trade crypto, check out the Bybit deposit bonus down below. Other helpful links down there as well. I'm James, this is Manzi G. Cheers for watching, and I'll see you in the next one.